So I'd like to introduce, next to me is Chris Vignone. He's the CEO of PM Advisors, Business Advisors, and real knowledgeable in the space. And from Avalara, next to Chris is Scott Peterson. He's our VP of Government Relations at Avalara. And moderating the panel is going to be Julie Lubetkin, who's our VP of Partner Marketing at Avalara. So please enjoy yourselves and ask lots of good questions. Thanks again for coming.
So Chris Vignone from PM Business Advisors. So we're a business tax advisory firm specializing in a slew of tax savings opportunities for clients. First and foremost, sales tax is the largest part of our practice. We have probably around 11 people dedicated just to dealing with complex sales tax issues. Nexus Studies, obviously Wayfair. We're a big and proud partner of Avalara. We do Avalara implementations for several product lines. So we are everything sales tax. Something unique about our firm from CPA firms and other firms is we also do a lot of sales tax recovery work. Now you may not know this, but firms actually overpay sales tax as much as they underpay sales tax. So what we do is we go into a lot of our large clients and we identify their overpayments and get the money back from them, which is an interesting item because now with everyone collecting sales tax, we actually think the likelihood of overpayments will go up in the near future. And the way that clients are audited by the government are going to change because of Wayfair as well. And so we are happy to be here. My background real quick, I'm not old enough to be Big 8. So I'm old enough to be Big 6 though. So Coopers and Lybrand, was there for a few years. And then also I was a tax director for a publicly traded company called OmniPoint Communications. And then since 2002, I've been in some form of SALT consulting. And then we started PM Business Advisors about 4 or 5 years ago. It's been a great run. In addition to advising clients directly, we also work with CPA firms. We work with about 40 to 50 different CPA firms across the country, supporting them in areas such as sales tax, as well as R&D tax credits, cost segregation, and other items. So, go ahead.
My name is Scott Peterson. I've been with Avalara now for 7 years. I came to Avalara from the government side of the world. I spent 10 years as the director of the South Dakota sales tax. So my job was to administer a state, 205 cities. At that time there were 5 tribal governments with a sales tax. And went from there to the streamlined sales tax. I was the first executive director of the streamlined sales tax. Spent 7 years there trying to coerce states into doing a better job of being partners in the world that we all live in. Quit when they stopped caring. And like I said, I've been with Avalara for 7 years, and my job is to make sure that my old friends in government don't get too crazy, and to keep all of us inside of Avalara informed on what they're all up to.
Great, thank you, Chris and Scott. Let me start with a question that I think is on everyone's mind, one that we get all the time. And I'll address first, I'll ask Scott the question, given your government experience. So there was the case last year, South Dakota versus Wayfair, and at the Supreme Court, and it really changed things, as I think all you know, with sales tax. Can you talk about that case and talk about what was decided there, as well as what has happened in the 15 months, 16 months since that case was decided?
Yes, absolutely. Obviously, director of sales tax for South Dakota for 10 years. This was the thing that I always wanted to have on my resume, but I didn't get that opportunity. Odd case. When Justice Stevens in the DMA versus Broll case, the Colorado case on use tax notice and reporting, said that that the court was debating the wrong issue, and they were should be debating Quill and Bellis S, and the bar should bring back another case. The states just tripped over themselves trying to be the other case. In South Dakota, in South Dakota has a very short legislative session, and they start like the 4th day of January every year. So they were in and out of there by the end of February almost every year. So they get things done really quickly, and they're it's one party, and they only have a sales tax, so they do everything to protect the integrity of that sales tax. So it was a simple thing for them. Well, it wasn't simple for them was knowing what they had to do. They got lucky, the National Conference of State Legislatures, which is the trade association for state legislators, When they saw the opinion, or the sentence in the Burrell case, they hired a Washington D.C. firm who specializes in making appeals to the Supreme Court. That's all they do. They make appeals to the United States Supreme Court. And NCSL said to them, we want you to look at the Quill case in 1992 and tell us why the state lost, and then to write a law that mitigates everything that caused North Dakota to lose. And if you were to look, and if you haven't, it's interesting reading, you look at the South Dakota law, pardon me, the law itself is 2 sentences. It just says if you make sales in South Dakota, you have to collect sales tax. That's all it is. Everything after that, that 4-page piece of legislation, everything thereafter was about the case. First of all, there's a stay. The state can't enforce this against anybody at the moment the state sued or the state sues somebody. So there's an automatic stay, which is one of the problems that harmed North Dakota. No retroactivity. Even if South Dakota wins, the state can't go back. The state has to go forward. The thing that most people say killed North Dakota in 1992. Because the Attorney General, the Supreme Court asked him that case, if we side with you, are you going to go back? And he said, yeah. So, in the Quill case, it took several years to get the Supreme Court. And so the justice said, obviously that would taint your opinion, no matter how much you like the idea. And then it talked about how quickly, then the third sentence, or the third section was, this law is unconstitutional. Legislatures pass unconstitutional laws all the time. And they often know it's unconstitutional, and they do it anyway. This was one of those extremely rare cases where they actually said it was unconstitutional, and they directed the court system in South Dakota to find it unconstitutional. This law was built for a court case. They never intended to administer the 2 sentences that actually became the law. All they wanted was action. They wanted to be the very first state to get something for the United States Supreme Court. Court takes it, court rules in their favor, court does what nobody expects them to do, which is overturn the physical presence test first established in National LSS in '67 and then reaffirmed in 1992 in Quill versus North Dakota. In the year, in the 6 months before the court issued their opinion, we at Avalara I worked with the marketing team to try to get something ready to go. As soon as the court makes a decision, we're going to publish something. Well, we had to write it 2 ways. Having Wayfair win, that was an easy thing to write. Court sides with Wayfair, you're done. South Dakota wins, there's like 14 different ways that South Dakota could have won. And the way that they won wasn't one of the ways that we wrote up. Never occurred to me that the court would simply undo 50 years worth of precedent. And that's all they did, really. They simply said that physical presence was no longer a test that the court system should use to determine whether or not a court has created a tax that's unconstitutional. Well, they didn't create a bright line, which is what physical presence was. Everybody saw that as a bright line. And so they knew they had to do something. So in the case, they said the things they liked about South Dakota's law. Well, there was nothing to like about South Dakota's law. So they talked about the fact that it had a small seller exception, $100,000 in sales or 200 transactions. You had to be above small to be subject to this test. Wasn't retroactive, positive thing, but that was planned. And those are the 2 big things. And then the rest was about the streamlined sales tax. The court liked the fact that they remembered the streamlined sales tax. Of course, the streamlined sales tax had given a brief to the court talking about how good they were. And South Dakota, in their brief to the court, talked about how important it was for retailers that South Dakota was a member of the streamlined sales tax. And in the opinion, they talked about uniform laws, and that's what SST was designed to do, state administration, and certified service providers, Avalara. This concept of where the state pays a software company and a service company to provide sales tax automation services to retailers. Those are the 3 things the court said about South Dakota. They didn't say it was a bright line. South Dakota kind of sees it as a bright line. Streamline sales tax certainly sees it as a bright line. And no other state does. Everybody else says, addictive. We don't have to worry about that. That's the kind of stuff they always say to make people feel good. The reality is, I don't have to have physical presence in the state before the state can make me collect sales tax.
Yeah, I'll just share with you from a practitioner standpoint, right? So whether there's some CPAs here, people in private industry. So I think January, when I first heard that they were going to take the case, right? It was interesting. We didn't think there was a long shot for it to pass. We knew it would be close. We didn't know what it was. Sitting here as a practitioner, I didn't want to spend too much time on it, right? My time is limited. We have a firm of 15 to 20 people. How much time do I spend on this? Do I read that? I knew if it went through, obviously, it was going to be a game changer for the industry, whether you were a tax professional in any way. It was going to change the way that you handled sales tax. So, and it's funny, there's probably 10 events in my life I remember exactly where I was, and I remember exactly where I was when I heard about Wayfair. So I was doing a presentation for the Cuban American Society in Marco Island. Of course, that's where you want to be.
I was drinking wine in California.
There you go. There you go. And it's funny because immediately I call our marketing team, I call everyone. I'm like, we have to get in front of this. We have to be the firm. We have to position ourselves. And for the next 60 days, we wrote content. We did everything we could. I had webinars. I think Eric's with me. I think we did them once. We were planning on doing them once a week and so forth. But what I found the first 2 months, it was we had to convince people that this was real. I would print out, I would actually print out the ruling, send it to our clients. So like, no, that can't be real. And time again, I felt for the first 60 days, I was banging my head against the door and just trying to figure out how to convince people that, yes, you have to collect sales tax now. Until, obviously the big date, the next big date was October 1st, 2018, which is Bloomberg dubbed it Nexus Monday. I think that's when they called it. And I think that's after Nexus Monday, where I think 11 states implemented their rules. A couple states came across immediately and implemented in June and July, but that October 1st was the big date. That's when things started changing. That's when clients started believing, they started seeing, and then the next question was, how do I deal with it? So that's what we went through. I think the first 6 months, just looking back and
I think
figure out.
you're probably still encountering that. I talk to CPAs all the time who have clients who say, nah, Congress will fix this, don't worry. I don't need to comply, Congress will fix this.
Well, there were bills, right? Several bills came out, just to kind of follow up and close the loop on what happened that first year. But several bills came up. The four states without sales tax, those senators went ahead and put their own bill together. It was called STOP. I forgot what the acronym standed for. But also each little state fought their own war. New Hampshire came out. It was very interesting. They said, okay, any other state that wants to collect the sales tax from a company incorporated in our state, New Hampshire, you have to get permission from New Hampshire to be able to collect sales tax from them. And so it was really interesting what was going on, and this was creating a tremendous amount of confusion around whether companies should comply or not, obviously. And listen, I'm an advocate. We're Avalara, obviously, compliance partner. We're all advocates for our clients, but number one, as a consultant, I don't want to tell my client to start collecting sales tax if they're not supposed to. It's like this whole issue with California and the threshold a few months ago. What do you advise your client when it looks like the rule's about to change? So those first 6 months. Or Kansas today, yeah. So those first 6 months were incredibly challenging. I think whether it was for Avalara, or whether it was a consultant, or whether it was for a practitioner, we're in a different spot now. But I think,
You're in a different spot now? I'm just as challenged today as I was the day they started.
I think I'm less challenged. I don't have to convince people as much, especially when, Washington and California, obviously, they're sending letters out left and right. Telling people
I still get asked the most basic questions. And so there's a lot of people out there that haven't yet got themselves to a spot where they think they need to do something.
Well, why don't we lead to the next question, actually. So the next question is, how have states been responding to it since? Right, so just to give you a high-level view, so there's 45 states, and I'm boots on the ground. He's the law guy. So 45 states that have a sales tax, right?
Yeah, plus DC.
Right, and 43 so far have passed, not necessarily enacted, but passed some form of economic nexus, right?
I would have said yes a week ago this time.
Okay.
Now with Kansas, I'm not sure what Kansas is.
I think the number is 43 with Kansas, but
It's 43 with Kansas.
Yeah, because then we have the two states that haven't implemented anything yet are Florida and Missouri.
Yes.
So I think those are the two states left now. So from a big perspective, all the states, for the most part, have implemented an economic nexus threshold or law in some form or another. So that's really where we are today. So if you're sitting in this room and you're a CPA and you haven't complied, or you're a company you haven't complied, you really need to get on board. I mean, I don't see any other chance of this going away. Scott, is there?
No.
What did they do with a couple pieces of federal legislation? Are they even still alive? Or
Yes, there is a bill sponsored by Ron Wyden and John Tester, and then there's one by the two folks from New Hampshire. No, the four of them. So the two folks from New Hampshire, Wyden from Oregon, and Tester from Montana are on a bill, and then John Sensenbrenner from Wisconsin has his own bill.
Okay.
His bill is much broader. His bill is intended to address efforts by states outside their state on a variety of different things.
Okay. So here we are, more than a year later, not really sure what these last two states are going to do. Florida has a bill that's pending, and that should pass. I think Missouri is, no? Question?
I don't know.
Anyway, they have a bill pending. We'll see what happens with that. Missouri hasn't even drafted anything yet, though, right?
But they had 5 different bills this last year.
Oh, okay, but they haven't
And
drafted
they don't
anything.
if you don't know, the Missouri sales tax is a mess. It's absolutely a mess. I mean, they've got 2,300 taxing jurisdictions in Missouri, all by themselves. They overlap. There's almost never a use tax. So it's a little sales tax that's applied to a 3-block area to build a mall, or a 3-block area to build a theater, or a 14-block area to fund a fire department. It's just exact. Plus, they have a constitutional amendment that was passed 2 years ago that prohibits them from taxing anything that wasn't taxed before, which means they can't change any definitions. So they want to become a member of the streamlined sales tax because that gives them there's some things that go along with that would make their sales tax better. They can't, because they can't adopt any of the definitions unless they can. There's like 3 definitions they can adopt because it actually reduces the amount of sales tax they collect. All the rest increase the amount of sales tax they collect. But it's unbelievably complicated sales tax.
Okay.
Okay, just one other thing. So he mentioned local taxes. Let's talk about that for a second. Colorado, also, so we have 43 out of 45 states, but we still have local tax issues we're dealing with as well. So Colorado, are we set? Are the localities going to implement or not? They're not right now, is it right now, right? Okay, so in Colorado, you may have economic nexus for state, and you may not have to file local. Is that?
No. So Colorado's what we call home rule state, which is a misnomer, but anyway, that's like an hour-long conversation. They have 72 cities and counties that administer their own sales tax. So they have their own Department of Revenue, they have their own tax return, they have their own auditors, they have their own remittances, they have their own definitions of the things that they tax and exempt, and they get to tax and exempt whatever they want to tax and exempt. They don't have to agree with each other. There's 230 cities, counties, and special taxing jurisdictions that are state administered. So if you file a state return in Colorado, you're going to do the state plus 230 cities, counties, and special taxing jurisdictions. What the state has done is they've adopted a statute, started by regulation, but then the legislature came in and did it by statute, that makes them destination sourcing. They were origin sourcing, which is kind of a thing in home rule states. But the state said, there's no way we can make somebody from New Hampshire collect the state and local sales tax in Colorado if someone in Colorado doesn't have to do the same thing. In the old rules, a year ago, if you were based in Colorado, if you were based in Denver, and you made sales everywhere in Colorado, you only had to collect the Denver sales tax unless you physically made yourself present in another taxing jurisdiction. So if you were never present outside of Denver, you never collected any tax under their law except the Denver. The state said that obviously unconstitutional, can't treat out-of-state people worse than you can treat in-state people, and they wanted out-of-state people to collect the local taxes. So they made every in-state retailer in Colorado change. But they made them they did it using the same threshold. So $100,000 in sales in Colorado makes you collect the state sales tax and the state administered sales taxes. If you're an in-state retailer in Colorado and you make $100,000 in sales in the state, then you have to start collecting what they call the local use taxes.
Okay.
The 72, they don't know what they're going to do. They don't want to change. They don't have the authority. Cities aren't in the Constitution, so when the Supreme Court ruled, they didn't say Denver got to do something. They said Colorado got to do something.
So that's still up in the air.
Oh,
And then the last frontier, which I heard some discussion on recently, and then we can kind of close out the general state question, is Alaska. So Alaska still, for those of you that, we have a couple clients that collect in Alaska. They sell door-to-door items, and they're all over Alaska for some reason. But Alaska still hasn't gotten their hands around, right? Obviously, there's no state sales tax. We have all these little city sales tax. They're trying to make an effort, though, right? They're trying to come up with some uniform policy.
so the Municipal League of Colorado, Alaska, pardon me. I deal with the Municipal League of Colorado too. The Municipal League of Alaska has decided that the only way that those cities and boroughs up there will ever get the authority is if they band together, and that the Municipal League is the only central organization there is in the state for the local governments, and that the Municipal League act as the Department of Revenue. So they're getting ready to issue an RFP for someone to build a revenue system for the Municipal League that out-of-state retailers would dump tax returns and tax payments in. And they think, and I don't know how they do this, but they think they can have this ready to go by July 1st. I have a monthly call with the executive director up there, and he tells me how they're progressing, but I don't know how in the world he'd ever get to July 1.
So I think that updates the.
Yeah, so obviously super complicated, super complex. So I think the next big question is, what should a business doing business in multiple states, what should they be doing now? Do you want to go first?
Yeah, I'll
Chris?
take this first. So, quote unquote, boots on the ground every day. We're receiving calls every day from our clients, from our CPA firms. So the first thing is you have to do what we called an economic nexus evaluation report. I didn't come up with a fancy name. I know I should have. I don't have the marketing team that Avalara has. But that's what we named it. So an economic nexus evaluation report is basically analysis of your sales by state for the last 2 years. Now, we didn't talk about threshold rules, but when you're analyzing the sales by state for the last couple of years, we actually encourage companies to go back to 2017. Okay, if you haven't looked at economic nexus yet, and you're sitting here today, you think, okay, I'll look at 19 and 18, that's enough. It's actually not enough. All right, because 11 states came in on October 1st, 2018, and when you needed to evaluate your economic nexus for those 11 states, you needed to use 18 and 17 at that time. So the number one thing is an economic nexus evaluation report, or whatever your advisor or CPA firm looks at. Obviously, this is a very complicated study. I think one of the biggest challenges, and maybe we could talk about this for a second, is when you're evaluating your company's sales by state for the last 2 years, what goes in the threshold and what doesn't go in the threshold. So Scott, you want to talk a little bit?
So remember, this was a law written by a law firm in Washington, D.C. They didn't know anything about sales tax. So the law that South Dakota passed uses a phrase that South Dakota doesn't use. It says gross proceeds. So the law that they passed, and the law that almost every other state passed along with them, says that the gross proceeds, and so $100,000 in transaction or in sales, or gross proceeds from sales, or 200 transactions. Well, gross proceeds is not in South Dakota sales tax. And every other state adopted that in the first round, so let's see, easily the first 20, all adopted gross. And we're starting, this year we saw a couple that didn't do gross, but in their mind, gross means gross. So if 100% of your sales are things that are for resale, just about all those states expect you to have a sales tax license, even though you will never collect a penny in sales tax. What happened this year was we saw like 4 states go to some variation that was intended to get rid of resale. So retail sales, a couple states used, and a couple states used taxable sales. Neither are very good terms. They should have been more explicit. They should have said sales for resale don't count. Everybody knows what sale for resale is. Every state's law is absolutely uniform on sales for resale. They're not the same on retail sales or taxable sales. It's a mess.
Right, it is, and I think, I know you guys broke out, you had revamped CERT Capture at one point. You probably never intended for CERT Capture to be such a popular product. until you realized all these companies. So one consequence of filing a zero tax return, okay, in a state is number one, you're registering, you're on the company's radar, and if you're filing a zero tax return, you have hundreds of what? Exemption certificates, okay? You didn't care about collecting those exemption certificates in all these states before because you had no filing obligation. That was never going to be audited by the state. Well, anyone that's been through a sales tax audit, okay, the number one thing auditors target if you have exempt sales is they want to see all your resale certificates for all your clients. So clients were kind of poo-pooing, well, I'm sale for resale, I don't need to register there, Chris, you're being a little, too much, you're trying to make extra money, whatever. I said, do what you want, right? I always put my CPA, accountant hat on, tax advisor, and then my business hat on as well. I just want to let you know, if you're audited by a state, that you're filing zero tax returns, and if you choose to do that and you're not collecting the certificates, those are all taxable sales. Well, can I go back and get the certificate? Yeah, you can. 95% of the auditors are reasonable, but guess what happens when you go get that certificate? The company's out of business. So what happens if the company's out of business? If you get an auditor that wants to follow the letter of the law, you owe sales tax on that transaction. So there were all these other consequences of Wayfair that, obviously we're learning about this every day, but yes, the sales thresholds being so broad and defined as gross was really a challenge. And so when you're going back to the analysis, when you're doing this analysis, I think that's the number one thing you have to focus on. Making the right decision, okay, of whether you're going to file zero returns, which you probably should most of the time, but if you're in a situation where you have exempt certificates, if you're going to file the zero return, you have to have a process in place. Obviously, Avalara's got a nice product with cert capture. You could do it manually. There's other ways to do it. But please keep that in mind as you're doing this analysis, as you start flipping the flags. Exemption certificates now become a big part of your business and what you need to analyze.
The good news is that every state that's doing this is putting people on an annual filing cycle, which means you file a December return in January. The bad news is when you file one return a year for a state, you're going to forget. And then you spend 3 months fixing and getting them to waive penalty and interest on a zero return.
And then I think just finally, so when we're helping our clients go do this economic nexus evaluation report, what this has done, we give them our total nexus analysis as well. So we said, okay, we're going to talk about economic nexus, but can we ask you these other questions just in case? So guess what happens? One of the questions is, have you ever had a sales rep in a state before? Well, yeah, Sally worked in North Carolina for 2 years, but we didn't think it was a big deal. Tom, our rep that goes out and fixes our equipment, yeah, he travels to 17 states. We've never filed in those states before. So if you're doing your economic nexus evaluation report, you need to really do a full nexus study, okay? You need to understand all the activities that happened in that state. I've had clients that told me they're filing payroll taxes. One client, I said, all right, we're gonna do a study. They go, oh, don't worry about these 5 states because we already filed payroll taxes in those states. I'm like, why do you file payroll taxes? We have employees. Why aren't you collecting sales tax? Oh, it's just one employee. How many times I've heard that? We only have one employee in the state. One employee creates physical nexus almost in every state. I'm going to go ahead and say every state.
I would say every state.
Yeah, so...
Unless they're writing software for your overseas manufacturing process.
Okay.
Then you can make an argument that they're not helping you engage in business in that state.
There you go.
But
so as part of your process of looking at your business and determining what you do next, do the economic nexus study, and then do the full questionnaire. Find out the activities that create nexus in the past, that create some form of physical nexus. It's funny, I never thought I would have, as a consultant, you want big clients, big fees, big dollars, right? One of the things that happened in Wayfair, I'm in the heart of New York City, so I know a lot about the little niche industries. So when Wayfair came along, I thought about all the little niche industries I can get into, and the one came up was art dealers. And I went crazy the first 2 months marketing the 275 art dealers across the United States. No one's going to talk to these guys. And what do art dealers do? They sell big, expensive paintings all across the country. So it was interesting because we got a bunch of clients. I think we have 10 or 15 art dealers as clients now. And but it was very interesting as we started analyzing who it's going to impact, how it's going to impact. None of these art dealers ever imagined collecting sales tax. And that was actually one of their strategies, is that ship something outside of New York State so my savvy, high-net client doesn't have to pay sales tax on it. So that didn't happen. And again, that's an industry that never thought they would collect sales tax. So do the analysis, no matter what type of company you're in, what type of industry you're in, and then definitely do the physical presence. Ask operations, find out what's been going on.
Absolutely. All Wayfair did is add one more thing for the reason why you might have to collect state sales tax. It didn't eliminate anything else. All those things that the states were trying for, physical presence is the biggest, of course, all those things still exist. Well, I'll take it back. The only thing that's going to get repealed is cookie nexus. The Ohio and Massachusetts idea where downloading an app onto an iPhone created physical presence for you. And they're both, I just saw just last week, Massachusetts noticed they noticed they're going to repeal it, and Ohio repealed theirs this year. So everything still exists, plus, and Chris is right, the first thing they're going to ask you, the auditor's going to ask you is, what was the first sale you ever made in the state? And if it's a state whose law went into effect in 18, and yet your answer is 2017, that's your start date. And if you don't haven't collected sales tax, there's a pretty good chance you're going to owe it. And then if you have physical presence, employees, anything like that, the start date is when that person showed up.
Well, let me share one example where there's a massive confusion on is Amazon and FBA. We're going to talk about Marketplace a little later, so I won't talk about Marketplace yet. But if you are an Amazon FBA user, okay, you have had physical presence in those states. I have this conversation, Scott, like 3 or 4 times a week.
Yeah.
You've had physical presence since you first put that piece of inventory. When you sent it to Amazon in New Jersey and they turned around and sent it to their 17 warehouses, when they sent it out to those 17 warehouses, you've had physical presence in the state since then. So if you're coming into this economic nexus analysis and you're trying to determine what to do, if you have anything sold through Amazon FBA, if you're a CPA with clients or you're a company that sells through Amazon FBA, that created physical nexus, and it's very likely, I mean, Amazon, fulfillment by Amazon's been around since I think 2015, some version of it. So another thing as part of your analysis to keep in mind, besides people, employees, if you're doing business with Amazon, you may have had physical nexus going as far back as 2015. And then we'll talk about Marketplace in a minute here. But that's just another thing to think about as you're determining, whether you have nexus and what the study is.
That was my next question, Chris. So it was about marketplaces. So why don't you talk about some of the new marketplace rules and what's going on in marketplaces? Who do you
Sure,
want
I'll
to
take
start
this.
first? Okay. Thanks, Scott.
The Burrell versus DMA case that I talked about earlier, where the justice put the sentence in that started this whole mess, that was about a law that Colorado passed in 2010. Colorado said, okay, if I can't make you collect sales tax, you have to help me collect use tax. A use tax, every state's got one, created in the 1930s, right after the sales tax was created, has this immense hole in it. It's only enforceable if the state knows you bought something. And how do they do that? They have no idea you bought something. No idea. So Colorado said, let's think of a way of forcing retailers to give us the information, and then we'll use that information to collect the use tax. You know what one of the biggest complaints about sales tax over the last 25 years is the states make everybody else do the work. Well, so this is a variation on that theme. Everybody still has to do something, but the state actually goes out and sends notices to employee or to individuals in Colorado. Well, Direct Marketing Association didn't like this. They sued, took 7 years to get to the court system, finally found it to be constitutional. That is the first thing that states used to make a marketplace and collect sales tax. And what they did to the marketplace was, so this law says, if you're a retailer selling into Colorado and you're not collecting Colorado sales tax, you have to do three things. One, you have to tell your customers at the time of sale you're not collecting the Colorado sales tax and they might owe use tax. 2, you have to send a report to them at the end of the year with a list of all the things they bought from you throughout the year, the total, another sentence that says you didn't collect Colorado sales tax, and another sentence that they might owe the use tax. And then in March, you send a report to the Colorado Department of Revenue, and in that you list all your customers, the total amount that they spent with you, and the ship-to it's sorted by ship-to address. State then takes that data, they get it from all these different people, and they create this massive list of Colorado consumers that didn't pay sales tax. And when you get this massive list, you can actually, there's the scale that one needs if you're a Department of Revenue employee to send a bill to a consumer. The state said, well, if that works for consumers, why can't that work, or if that works for a business, Amazon's a business, Walmart's a business, Etsy's a business, why can't we just say to the marketplace, and the first law did it this way. The first law said, if any business who sells on your marketplace is subject to the notice and reporting law in our state. You have to comply with that law yourself. And the first version was in Washington. Washington's first version said that these are always a choice. You can either do all the notice and reporting things, or you can collect the sales tax. And so they looked at, in that year, it was Amazon, looked at Amazon and said, okay, we're pretty sure you've got a lot of sellers that meet this requirement in Washington. And so you have to start collecting sales tax for that group of people. Now, the people that are already in Washington, they're already collecting sales tax. So they said to Amazon, you have to sort these two groups of people. Those who are in Washington and collecting sales tax, and those who aren't. And Amazon looked at the amount of work they'd have to do and said, nah, I think we'll just turn on tax everywhere. So they slowly started turning on tax everywhere. Well, this law, let's see, that would have been 2017. That was passed in March of 2017. And then in June of 2018, we had Wayfair. And then since then, they've stopped the notice and reporting, except in Oklahoma. And they now use Wayfair. So if the marketplace sells anything, and they exceed the state's economic nexus threshold because of Wayfair, or if any of their sellers on the marketplace sell, they have to do it. What they've done, though, is think there's 5 different versions of this law in effect today. 35 states, 5 different versions. First version created a tax collection obligation on the marketplace for the marketplace's sellers. The last version simply declared the marketplace a seller. You have all the rights and obligations of the seller in our state. You will do everything that the seller would have to do in our state.
Right, and Amazon's not required to comply in all those states. They
No,
comply like
no.
in 20. Is there 20 marketplace states?
No, there's 35 that have enacted the law. They haven't all gone into effect yet. This October 1, there were
Right, there's a
there
bunch
were-
on October 1st coming up. Right, that just passed over.
Yep.
So let me talk practically about Marketplace. There's lots of confusion, especially when Wayfair first came out. How is Marketplace going to work out, reporting, so on and so forth. So Marketplace, if you have a client, all right, if you're a CPA, have a client selling on Marketplace, or if your company sells on, Amazon, let's talk about Amazon FBA or any Amazon product. If you're in a state where Amazon tells you, and it's available on their website, they'll tell you, I think it's 20 states, I don't remember, they're not doing it in all 35 states, they're going through it. Obviously, South Carolina, they just fought. South Carolina won the lawsuit, right? And so I don't know if that's retroactive there.
That was yes. That was
I think that's retroactive
for them.
So what you need to know is that Amazon's only going to collect, sales tax on your sales that go into that state. Most companies have multiple platforms that you're selling on. Okay, maybe some of your smaller CPAs with smaller sellers, but if you're selling, all right, into a state that has Marketplace and you have sales on your own platform, Amazon's collecting their sales tax, you still need to collect your sales tax. Okay, it's really important. So if you're collecting on it, plus not Etsy, eBay, they're not all going ahead and collecting right away. They're kind of rolling this out on different dates. So, and here's the issue. I have clients call me and say, oh, I heard all the states are collecting on Marketplace, so I don't have to collect sales tax anymore. I don't have to register. I said, well, not necessarily. First thing they call me and say, well, do I have to register? This is an interesting question. So let's say all you have are sales through Amazon FBA and only in states where Amazon is collecting on a Marketplace. Do you have to register in those states? Scott, the answer is?
You do in New Jersey.
Yeah. So it depends on the state.
The majority is, this is one of those things, because this thing, remember this thing's only 14 months old, 15 months old. So there's still a lot of stuff, and they all rushed out to do the same thing. And
so let's say all you have are sales through Amazon FBA and only in states where Amazon is collecting on a Marketplace. Do you have to register in those states?
Passed last year, where the Department of Revenue is now saying, maybe we don't want to have everybody registered if all they do in our state is sell in the Marketplace.
Yeah.
But if you have any other sales in any other way into that state, then you have to be registered.
So let's say all you have are sales through Amazon FBA and only in states where Amazon is collecting on a Marketplace. Do you have to register in those states? Sales get added to all your other platform sales, by the way, for the threshold. Very
Yes.
important to think. Okay, I have clients that came to me and said, oh, Amazon's collecting sales tax, and I only have $10,000 annual sales from my internet platform, so I'm not going to collect there, Chris. Wrong, you need to collect there, okay, because you got to look at your total sales, going through Amazon and everything, and depending on the definition of the threshold. So don't get confused by marketplace. It's not an automatically get out of jail free card. Monopoly, right? It really depends on your client's situation and what they're doing. Again, you need to take a look at this and make sure you're making the right decisions. Although, in general, I think most people are happy with marketplace. I think the theme of the states overall the last 2 years is they really didn't want to hurt the small consumer. Okay, I get calls from people at home with $300,000 internet businesses where they hit the $200 threshold. One other nice thing that happened over the last 2 years, year and a half, a lot of the states got rid of the 200 transaction threshold. That was a killer initially. I mean, I've had clients that have sold $4 items over the internet and eBay, and they hit the threshold so quickly, and they're like, how much do I? Are you kidding me, Chris? Like, my business is $250,000 a year. I really have to collect sales tax. And it was really tough telling them that they had to collect sales tax and pay me or someone else to help them do it. But that's nice that the states are going away from the transaction count.
It is.
Right?
I'm not sure they're being generous when they're doing it.
Oh, you think they just don't want to deal with it?
They just don't, they're lazy.
There's not a reach.
They're just plain lazy.
Okay.
You can talk to Department of Revenue people. The thing they like about marketplace laws is I can license
One return.
and audit one versus 50,000.
Yeah.
I mean, it's like the third sentence coming out of their mouth.
Yeah, so
Maybe tomorrow.
there's one more topic I want to talk about. I know we have a lot of prepared questions, but then after this one, I want to turn it over. I know a lot of you have questions as well for these experts. But the one I wanted to just mention before, you mentioned it, Scott, earlier when you were talking about streamlined sales tax. And can you just talk about that and make sure everybody understands what that is?
So the streamlined sales tax is a group of 24 states, mostly Midwest, Midwest and East, plus Washington. And I mean, they form.
None of the big five.
No, none of the big five, but for the Big Ten.
Okay.
Yeah. So of the Pennsylvania is number 5, and then it's Michigan, North Carolina, New Jersey. The point of the organization in 2000, when it was formed, was to create a radically simpler sales tax. And that just is hard to do. I was there from the very beginning, did everything. It's hard to be radically simple. I mean, at the end of the day, there's about 5 things you have to do. You have to know it's taxable. You have to know what the rate is. You have to know how to file a return, not the 4 things, and you have to make a payment. I mean, you cannot get away from those 4 things. There's no matter how simple we made it, you still have to do 4 things. And since streamlined sales tax didn't start out called the streamlined sales tax, it was called in the beginning the zero burden sales tax system. And I don't know, can't remember who picked that name, but all of us thought, ooh, zero's a hard number to hit when there's 4 things you can't get rid of. So we created this thing called the certified service provider. So the goal to get to zero burden was to create a way for retailers to completely outsource their sales tax. So the way to make sales tax simple is to get retailers out of the sales tax business. You do that by encouraging somebody to create a company who assumes all the responsibility and liability that normally rests on the retailer. So I wrote the RFP for this thing. We created this thing called the certified service provider, and that is an entity who is literally someone who steps into the shoes of the retailer. The only thing, in a perfectly working world, the only thing the retailer has to do is actually collect the tax. So they collect the tax at the time of sale, because there's no way for somebody else to be inside that transaction, at least not yet. And then keep that money until that money needs to be sent. Everything else is done by this certified service provider. You certified service provider knows taxable, what the rates are, what the city boundaries are, what the return is supposed to look like, and how to make a remittance. So all those things that a retailer normally has to do on a day-to-day basis go away. All the retailer does is collect from the consumer the amount of tax that the certified service provider's tax engine puts on the invoice. That's it. And to get down to zero, the states were going to pay for it. And they got just extraordinarily cheap right out of the gate. I mean, in the beginning, I remember I was with a CPA from PwC, and we gave a presentation this week about what the CSPs the states were going to do for CSPs and how they were going to pay for everybody. And the next week, the governing board met and reversed the position that I gave the week before. So they got cheap and they went to somebody called a volunteer. And a volunteer was somebody who didn't have to collect sales tax. So for 13 years, this organization has run a platform that actually works. I mean, us and our competitors do exactly what the system was designed to do. The only thing a retailer has to do is collect the tax. But we do everything else. Except the market was about this big because the only people that were qualified for were people who didn't have to collect sales tax. Chris doesn't recommend to people to collect sales tax if they're not legally required to. Wayfair changed everything. Now, we have a contract with states, and that contract defines what a volunteer is. Well, every Wayfair retailer meets the definition of a volunteer. So now the volume that the states are looking at is potentially immense. And what are they going to do? They're going to get cheap again. I guarantee you. They're still going to pay. They went to the Supreme Court and said, this is what we do, and this is why it's a good thing for you to overturn Quill. And now they don't want to do what they used to do. But they're going to be stuck.
Right.
They got no choice.
So let's talk about the definition of volunteer is still used, though.
Yes.
So now we have to understand that definition, because Scott, I get calls every day now saying, hey, I got an email for Avalara, they said they're going to do all my tax work for free. I'm like, what does that mean to me? And so that's not quite the story. Obviously, there's 24 states where these services are offered for free.
24 plus Pennsylvania.
Okay, so
24 Pennsylvania later.
And there are things which could take away your volunteer status where you may not get those states for free. Listen, this is still a good deal. So whether you are half the states or whatever it is, but what the consultants, what we want to let people know is that you do need to do a little bit of an analysis here and understand. For example, Scott, if you had a salesperson in that state, okay, for the last 3 years, and you just didn't file because it was only one salesperson, are they a volunteer anymore in that state?
Maybe.
Maybe, okay.
Because there's
payroll, right?
Three factors to the definition of volunteer. Payroll, property, and, no, it's just two. Payroll, property, and whether or not you're headquartered there.
Yeah.
Yes. Or 25% of your sales.
25%.
25% of your sales. So there's
Total
three factors
property,
that the 25%, that would probably be collecting sales tax even at that threshold. So the rule is that if you have less than $50,000 in payroll, or less than $50,000 in property, you meet the definition of a volunteer. So if your salesperson were an independent contractor and is not on your payroll, it doesn't make a difference how much money they make.
Okay, so
They're not payroll.
that hasn't been challenged?
Oh yeah.
Oh, it has. So that was discussed as part of this.
They're challenging the heck out of that, but
Okay.
they know that it's a can of worms they don't want to open up. FBA. So if you happen to be
Right.
an FBA seller, and then you have to look at how much property you have in a streamlined state in an FBA warehouse. If it's under $50,000, you can still get the advantage of this service. Now, Amazon's going to be collecting for you anyway, so it doesn't make any difference. But
Okay, so yeah, so good program, but obviously you have to take a close look at it. Don't
Yep.
forget it's only the 24 states. But what do you get free, Scott? You get the registration free, compliance, and rates, right? Are those the general three things?
well, arguably you get everything. Arguably you get everything free, but it depends on what you need. If you need a Nexus study, you don't get that free.
Right, exactly.
But yeah, so you get rates, taxability, returns, and remittances.
Okay, and one thing I want to talk about is this thing called audit defense
Oh.
that's offered. Be very careful, okay? Audit defense is only offered on what Avalara certifies correct. So for example, if Avalara says that the sale of this glass is taxable in South Dakota, okay, but you went ahead and coded a medical object to the wrong tax code, that's not going to be covered under audit defense, right? So
The word certified and certified service provider means that the state has gone in and looked at the tax rules that we have in AvaTax and said to us, that's the answer we would give to if somebody called us. So the certified is that we're going to give the right answer. The problem is, this is another one of the other area where retailers are involved in the sales tax, is that retailers have to do the mapping. So we have 3,000 product codes. Retailer sells 400 different things. They have to go in when they're setting up their account and they have to match glass with glass, table with table, phone with phone. If they do medical product for glass or shotgun for phone, you're going to get the wrong answer. And in all of our contracts, that answer, then the liability switches to the seller.
And then we remind all our clients that audit support is only included on, obviously, the sales piece of this. As we all know, sales tax experts usually get audited on 3 things: fixed assets, expenses, and sales. So just, I wanted to say, I get this a lot from our clients, so if I go through this program and I never have to worry about an audit again, that's not necessarily true. You absolutely have to worry about an audit. And
You do.
Avalara will help out on their part, but there'll be other things that you still need to be concerned about. So.
All
But
right.
it goes back to the point that you started off with. There's no question that within by 3 years from now, there'll be so many more people collecting sales tax that the amount of use tax that's owed is going to drop significantly. 85% of state sales and use tax audit assessments are use tax. The things that you bought that someone didn't charge you sales tax on. That's 85% of the collections today. If there are more people collecting sales tax, that number will go down. In theory, 2 years after that, the governor will walk in and say, well, you guys used to produce $40 million, now you're only producing $4 million. Why am I still hiring all these auditors when they're producing a tenth of what they used to produce? Now, the flip side of that is that you're going to have a whole bunch of new people collecting sales tax that don't know anything about sales tax. And they're going to make mistakes. They're going to charge you somebody else's rate. They're going to charge you the wrong rate. They're going to charge you a rate on something that's not something tax.
Ship 2 when it comes to software,
Ship 2,
lots
oh
of
my
complicated
gosh.
issues.
Software as a service. If you got clients that are in software as a service business, get to know their business very well. They probably don't have an appreciation for how states differ in how they treat that product.